Hello traders, you're welcome back to the Forex Geek channel. In this video, we are going to dive into one of the most powerful harmonic patterns that every trader should know, and that is the crab pattern. Okay, if you've been looking for a precise way to spot market reversals, then this video is for you. Before we get started, make sure to hit that like button and subscribe to stay updated with more in-depth trading strategies and tips. So let's just get into it. So what exactly is the crab pattern? Well, the crab pattern is a type of harmonic chart pattern that traders use to predict significant price reversals. It's a highly, used and effective pattern, mainly because of its unique Fibonacci ratios, which we'll talk about shortly. Okay, now the crab pattern is a bit more complex than some other patterns, but that's what makes it so powerful, right? The pattern is characterized by deep retracements and precise price projections, making it one of the most accurate tools in technical analysis. Now, you typically see the crab pattern form after a sharp move in the market. Okay, the crab pattern usually forms after a sharp move in the market, right? So you can see using this as an example, you can see we had a bullish crab chart pattern around here, and you can see this is the 4-hour chart, right? You can see this notable movement that we had here before this pattern formed, and we had a bullish breakout, a bullish move to the upside, right? So basically the pattern is characterized by deep retracement and precise price projections. Okay, you will see the crab pattern typically form after a sharp price move in the market, and then you will notice a retracement in a specific pattern that fits the Fibonacci sequence. Now once it completes, the price often reverses, right? You can see it often reverses, presenting a potential entry point for traders who know what they are doing, right? Traders who know what they're looking for. Now that we know what the crab pattern is, let's break down its structure. Understanding the patterns, the pattern structure is key to identifying it on your charts. Now, the crab pattern is made up of 5 distinct points: 1, 2, 3, 4, 5, right? We have X, A, B, C, and D, right? Where each leg of the pattern follows a specific Fibonacci ratio. Now, let's go over these points quickly. Point X is the starting point where the price first begins to move. Then point A is the first significant high or low in the price action, right, or in the price move. Point B is the retracement from point A, typically between 38.2% and 61.8% of XA, right? Then point C is where the price retraces from point B and is often at a 38.2% to 88.6% of AB. All right. Finally, point D is the completion of the pattern, which typically occurs at a Fibonacci extension of 1.618 or 2.618 of XA, the XA leg. Now, once you've identified these points on your chart, you are in a great position to look for a potential reversal. Okay? Once you've identified it on your chart, you're in a great position to look for a potential reversal. All right? And your reversal should be around point D. You should be looking for your reversal around point D. Okay? Now, let's talk about Fibonacci ratios. These are the backbone of the crab pattern and are crucial for determining entry points and predicting price movements. Fibonacci ratios help us measure retracements and price projections. And in the case of the crab pattern, these ratios, right? These ratios are they give us specific levels to watch for. The most critical level is the 1.618 extension of XA, right? That's the 161.8%, the extension of XA, okay, which is where we often see price reversal, all right? Now we also have the 2.618 extension. It can also be a key area for traders to watch for a more extreme reversal. Okay. Now, what is great about these ratios? Can you see that this was the 161.8 Fibonacci extension level where we had notable reversal? So when price hits these levels, basically it's a strong indication that a reversal is imminent, which is when you can make your move. So how do you spot the crab pattern on your charts? Okay, you should keep an eye out for sharp price movements that quickly retrace. Once you've spotted the initial leg, that is from X to A, once you have spotted the initial X to A leg, the next step is to look for retracement from A to B and B to C. Okay. If those retracements align with Fibonacci ratios we discussed, you might be looking for a crab pattern, or looking at a crab pattern in the making. The final step is to see if the pattern completes at point D. Okay, this is an example, this is another example, right? After you have spotted the XA leg and you look for the retracements A to B and B to C, then if the retracements align with the Fibonacci ratios that we talked about, you might be looking at the crab pattern, and then just ensure that the D leg, the CD leg completes. All right, the price should hit the Fibonacci extension levels, typically around 1.618, or that is 161.8% to 261.8% of the XA leg. All right. So once the pattern completes, that's your signal to look for a potential reversal. This is going to be your entry point. All right, your entry level is going to be at the completion of the D leg, the CD leg. So why is the crab pattern so powerful? One of the biggest reasons is its precision. The Fibonacci ratios involved in this pattern are very reliable, and the structure of the crab pattern is more rigid compared to other harmonic patterns, which means it offers a high level of accuracy when predicting price reversals. Additionally, the crab pattern often indicates major market turning points, which can be an excellent opportunity for traders to enter a position early in the reversal. These turning points can happen after a period of consolidation or a strong trend, giving traders an edge in timing their trades. Okay, now that we know what the crab pattern is and how to spot it, let's talk about how to trade it effectively. Now, when the pattern completes at point D, that's your cue to enter the market, okay? You typically want to enter at a buy order, when the price hits point D in an uptrend, or a sell order in a downtrend. But remember, no trade is risk-free, so it's essential to manage your risk. One common method is to place your stop loss just outside the pattern, at the point where the price would invalidate the pattern's structure. Okay. Additionally, you can use other tools and indicators like oscillators. You can make use of your RSI, your relative strength index, your MACD, indicators or momentum oscillators that can help confirm the signals given to you by the crab pattern. Okay. Now, additionally, these tools can help you to further validate that the reversal is likely to occur at point D. So like any strategy, risk management is critical when trading the crab pattern. Because the pattern involves predicting price reversals, there is always a chance that the market could break the pattern and continue in the same direction. Okay, that is when the reversal does not prevail. Okay, that is the reason why it's important to observe good risk management, because in some cases, the reversal might not prevail. You might actually have a breakout, downward, and you might be expecting a reversal to the upside. So always have risk management in place, okay? Make sure to use a stop loss, ideally just beyond the D point, okay, the point D, to limit your losses in case the market does not reverse as expected. Also, remember that no pattern works 100% of the time. While the crab pattern can be incredibly reliable, it's always good to back up your analysis with other indicators and to stay vigilant in monitoring market conditions. And that is a wrap on the crab pattern. This powerful harmonic pattern can help you predict significant market reversals with impressive precision. By understanding its structure, Fibonacci ratios, and how to spot it on your charts, you can use this pattern to time your trades more effectively. If you found this video helpful, don't forget to hit the like button and subscribe to the channel for more trading strategies, tips, and market analysis. Thank you for watching and happy trading. Keep practicing and applying these techniques to your trading. See you in the next video.